Hey everyone, I'm trying to handle a coffee. I've got hair all over the place. But anyway, I'm already delayed because yesterday I was going to bring you this during the eclipse here in New York, but it turned out the eclipse was actually basically a dud. Too much cloud, and anyway, it wasn't totality. So we schlepped all the way to the Natural History Museum to join a crowd who I then realized would be totally inappropriate for me to start yelling about Exxon on a self-made video, so I didn't do it. Anyway, one thing that was exciting in the past week was the earthquake. The earthquake was definitely pretty exciting. I was sitting up here in Brooklyn Heights, which is already kind of crumbling, and our house is kind of crumbling because it's built in 1870, and they added 2 stories that they probably shouldn't have, so the whole house is pretty wobbly, and the earthquake came in with a lot of noise and the whole building shaking for, it seemed, my count was 4 seconds, but apparently it was 20. Anyway, let's get to the case in point here. The inside baseball is that Chevron and Exxon have both submitted a choice for arbitration arbiter, and Exxon now gets to choose the third, subject to agreement amongst all parties. The only thing I've got is apparently they're all Brits. So they are progressing with the arbitration situation. That was from a conversation regarding the quarter with Chevron. Both Exxon and Chevron, you want to watch out, are going to have noise from oil at sea and other derivative effects. So they've got multiple billion noise effects in the quarter, which will make the headline numbers look quite low. The numbers I threw together looked like the street was about right for Exxon at 215. I think I came out at 213. But if you add back in that derivative noise, you get to closer to 250, which feels like a better number with, Exxon making about $10 a year at that run rate, 250 obviously. The stock at 120, it feels like about the right price. Although everyone's now wanting to buy oils because essentially I think the cash flows and the returns are beginning to be appreciated by the market. I'll keep it as simple as that. Having said that, we were very critical in a note on Saturday of BP, and I feel bad for BP. Obviously, being a proud Brit, I'd love for them to be on a better track than they are, and I think that the essence of the problem is just this whole struggle about international energy company as opposed to international oil company. And I just think that they had a major opportunity to get out of that jam when Looney was forced to resign, because they could essentially have brought in a new CEO and just completely reset back to being a major oil company with known strong capabilities in deep water exploration, development, LNG, really strong trading, a couple of massive refineries that they have very concentrated ownership in. It's a perfectly good oil company. There's one major issue, obviously, which is that Russia has been written down to zero, but Russia's written down to zero. And our argument would be, if you want to be long a peace play, then BP is going to be a major beneficiary alongside the Russian oils of any sudden outbreak of, for example, the end of Putin as president and some sort of new regime in Russia. That's a hell of an investment case, but it's one of the ones I've got for BP. Will they change direction? I don't think so, because the latest CEO has made it fairly clear that they're going to stick with what they're doing. And as a result, we tend to think of BP now as a structural underperformer, unfortunately. What they should do, we think, is just minimize capex, completely cut the renewables businesses, sell them whatever, and just buy back as much stock as they possibly can. And like Shell, we're saying to them, move to Houston, move to Abu Dhabi, get out of London. Seriously, what's the point? And in fact, Shell's CEO, they seem the most likely to do it, but we would be really excited if Shell would get back in the S&P 500. That would obviously narrow the valuation gap that everybody sees between the European bigs and the US big oils. The problem is generally US investors don't really want to buy oil, whatever might be happening right now. Generally speaking, they don't. And as a result, they have good choices in the US anyway if they do want to buy an oil. Exxon, Chevron, Conoco are all perfectly respectable names to buy, won't get you fired. But going outside the benchmark and buying a BP is just too much for them, especially when you don't really appreciate the direction the company's going in. Shell, with a new CEO talking about getting into the S&P 500, that one can keep running. Having said all that, the RSI on the group is so strong that we've got a little bit concerned that everyone's bullish. You're starting to see the $100 is coming type rhetoric in the media. that's at risk of triggering the US government to liberalize things like sanctions on Iran, Russia, etc., in order to stop the oil price going any higher. But what we did find out this week is that Kathleen Kelly's view, our OPEC whisperer's view, is that Saudi won't be in a rush to add oil back into the market, even if we're in the mid-90s in June. That'll be the next OPEC meeting, June 2nd, I think, is a Saturday, conveniently not. But will OPEC liberalize its relatively tight grip on the market right now? She doesn't think so. So that looks bullish. And generally speaking, with inflation staying sticky, with the Magnificent Seven running out of steam a bit here, certainly diverging, we think the oils is still a very good place to be, and that we actually just like everything that's buying back stock. So that starts with Marathon Petroleum and it goes into the big oils. As long as people are buying the stocks and you then have the buybacks on top, the stocks can act very well, and that's what they're doing, although we do worry about this very high relative strength index, which probably needs to settle down a bit before you can have a next leg higher. But we've been saying that for 3 weeks and we keep getting next legs higher, and generally speaking we're bullish into June, so we might as well just stick with the bullish call. And I'll just show you Athena, how you doing? Pretty good cherries out here, no? Cheers.